Welcome, everyone. This is Kevin from the Yield Lab podcast. If you're new here, every week we invite fascinating guests to cover the topics of investing, entrepreneurship, and well-being. Our guest today is Eddy Travia, founder and CEO at Coinsilium. So, Eddy, you are in the crypto space since 2013. Coinsilium is a blockchain and open finance focused venture operator. And in 2015, you guys basically did an IPO, which was the first blockchain company to do an IPO. And you're now focused on supporting what you call open finance. So in this episode, we'll talk about why Bitcoin and open finance. We'll talk about NFTs, the crypto minefield, and we'll end up with a few more personal questions. Before we start, don't forget to subscribe to our channel and turn on the notification to never miss a single episode. And also keep in mind that nothing shared or discussed here is financial advice. So, Eddy, someone would say that you are an experienced, successful, yet pretty laid-back entrepreneur. So why don't we start with some context about your background? So what are the key turning points of your life that define who you are today?
Okay, good question. Thank you, Kevin, for having me here. I think the first key turning point in my both professional and personal life has been moving to China back in 2004. I had visited Asia before, as early as 99 for my work. And then when I moved to China, I was impressed by the entrepreneurial spirit of the country, of the people I met there. And that was an awakening, of course, to Asia as well in general, where I've been staying and living now since then. So that was very interesting. I was working for a private equity fund. And through different meetings, to different encounters, I met a French engineer who introduced me to Bitcoin, of course, later, in about 2012. And that was quite interesting because at first, I think like everyone, especially at the time, I was very skeptical. Why? What is this? What exactly? Where does it come from, etc. So that was another turning point, of course, is when I started, let's say, learning about Bitcoin, which is where everybody starts from. Also opens people's eyes to monetary systems, let's say economics in general. And in 2013, I decided with a couple of friends to actually help companies, help entrepreneurs who want to go in that space. So the idea was not to accumulate coins, but the idea was to help doers, people who were making something. And so I would say that's a major latest turning point in my life at this stage, yes.
So you've been living in Asia for almost 20 years now. You mentioned China and what you've seen there. What did you see that really caught your attention and made you really want to stay there? And that was very different from, for example, Europe, where you come from.
I saw a level of activity that actually reminded me one other country, which is the US, really. I felt this spirit of hardworking people and people with big dreams and no real drive, I would say, real drive. Of course, 2004 was a world of opportunities. As part of my job there, I was meeting people who created companies like Baidu, Alibaba. We're talking about companies that are going to become major players in their markets. But apart from that, hundreds of smaller company owners, extremely entrepreneurial and breaking through a lot of barriers at the time. I would say this reminded me a bit of the internet years, but actually, to be clear, the early years of Bitcoin reminded me a bit more of that. So there's been a bit of reminiscing because I was in my late 20s during the internet years, let's say 95 to 2000. And I was fascinated by that, by this first wave of, let's say, .com entrepreneurship. And I think China and later Bitcoin reminded me of that as well.
What are the key kind of similarities and also key differences that you basically saw between early Bitcoin years and early internet years?
Yeah, I think a massive innovation, people taking chances with crazy concepts, and some of them became very successful and some of them, of course, faded away. So there is this energy to try new things. The fact that your entrepreneurs are not scared to go there is a bit like a last frontier of technology. With the internet, people may not recall, but there were a lot of pressure from institutions, from government authorities to actually not go there. There was already in the internet years regulatory issues. Of course, not all of them dealt with money and fintech like Bitcoin, but there were regulatory issues at the time. And there were companies like, for example, Skype, companies like that, which actually went through barriers. For example, they went through the telecom regulations, right? So when we first started helping entrepreneurs in 2013, we had the same issues. But of course, Bitcoin was sometimes seen as a money, sometimes seen as a commodity, etc. So there were different layers of regulatory issues, which are still not solved today, by the way, most of those. And so I felt this. I felt the fact that they were fighting against some establishment or legacy companies. So there was this kind of David versus Goliath similarity. And the internet years were the same. You had, for example, Amazon. I remember very clearly downloading pages of affiliate programs of Amazon in the very early years, maybe 95. And for everyone, this was minor company. It was not something that was going to do what it did. And Bitcoin was the same. Most of the exchanges started very small. I remember in, I think, May or June 2013, Coinbase was raising 6 million. And there was a fund in China that was looking at it. That's why I was aware of it. So yeah, it started quite small. But of course, building on the internet, Bitcoin and cryptocurrencies, I would say, moved faster and became bigger, quicker.
So 2012, you have your friend that kind of shows you this Bitcoin thing, but it takes you a few months or a year until you make kind of like the leap. So like what happens in your mind during these few months, like since the first time you encounter this kind of weird Bitcoin thing, and then a few months later you say, I'm just going to leave everything and focus 100% on that?
Yeah, that's a very interesting question. So the first thing when you hear about Bitcoin, I would say, especially at the time when it's really not a mainstream thing at all, and very few people have heard about it, it may sound like a scam. It may sound like something which shouldn't have value. I remember every time we were doing meetups, that was the first question was, what is it backed? There is no value, etc. Yeah, and then we explain. But so at first, this was my instinct. My instinct was, wow, this could be dangerous because it could be a scam, and then people never get back their money, or maybe you cannot sell Bitcoin. The market was probably MTGOX, the main one, and then a few started to come up, but it seemed very risky. I think what attracted me to it was, first of all, we're talking about money. It's the core element of our society, of our economy. So that was interesting because let's say when you build something, you have different objectives, but going to disrupt money sounded both crazy and very enticing at the time. One thing that attracted me to being active in Bitcoin was also the fact that very few people were openly doing it. So when I went on LinkedIn in 2013, maybe, I don't know, April or May, and I started saying, I'm doing something in Bitcoin, I get a lot of people contacting me because they were not daring to say it openly because it still felt a bit like an underground kind of activity. And that was great. I mean, in the summer 2013, I was speaking to 5 or 6 Bitcoin founders or Bitcoin startup founders every day. So from Latin America to Japan to Europe. It was great. It was quite easy to access this very nice community. So yeah, I think my reflection was really around money and helping, as I said, helping entrepreneurs to grow in that space.
So how did you understand back then that the core concept of Bitcoin was around basically money and fiat currency devaluation and store of value, speculative? Because now since a few years easy because there's this guy, Safety Amos, who did an amazing job at writing a book to explain to people simply what Bitcoin is. And I think about 80% of the book is actually not even on Bitcoin, it's about on the evolution of money and all that stuff. People can go and turn to something to understand that. But back in 2013 or 2012, like, how does one even understand that's the key concept?
To be clear, these concepts were around then. You just needed a bit, maybe more time. And yes, there were not a lot of books, probably no books at the time really dealing directly about Bitcoin. But I would say in Bitcoin Talk or in different forums, different meetups, we were meeting, of course, libertarian, because that's at the origin of Bitcoin. There were a lot of those. But every time there was a discussion around economy, around monetary system. So this was out there for sure. And as I was saying, the first meetups we were doing were all educational. I spent the first years of basically educating everyone I met about Bitcoin, like most early Bitcoiners were doing. I was meeting people in a ferry in between Hong Kong and China. We're talking very quickly about Bitcoin and how it can change certain things, economy, etc. So that was quite clear. If you were reading, for example, Vitalik was writing very well in, I think, Bitcoin Magazine and other writers there. Yeah, they were talking about this. So you just needed the time. I would say that's the most important thing, is you needed the time to read through and to understand. And that took a few months to be clear. Yeah.
So what would you say is like the key thing that you understood at the time that most people didn't, and that really made you go into this and say, again, I'm going to focus, because I believe in 2013, you said, okay, you focused 100% on that, which is
Yes.
very early and probably seen as extremely risky for a lot of people back then. So what did you understand that people didn't?
I think I saw an opportunity, but of course, if today you say, oh, I knew it was going to get that big, probably not. I remember very clearly we organized a conference here in Singapore. The first one in Asia was called Bitcoin Singapore 2013. And at a friend's place, we organized a pitching session, right? Demo. And so there were funds coming, we're talking about a small event, maybe 20 guests and a few entrepreneurs. And so what was very clear at the time is a number of doors that were closed on our face. It's like you talk to a lot of institutions, you talk to banks, you talk to consulting firms, you talk to industries. We don't care about Bitcoin because a bit like the internet in the 90s, Bitcoin had already a kind of a controversial image, right? No, we don't want to talk about Bitcoin. This is not regulated money. This is not regulated in any way. It may not be honest or whatever. So this was very clear so I like that. And I think most people at the time liked that. It was a challenge, right? The challenge was, let's open the doors. And that's why we did an IPO, really. We did an IPO because we wanted to prove to everyone that this was legitimate and you can actually do something as regulated and as legally compliant as an IPO. So yeah, that's all. The speed then Bitcoin became quickly, and of course we can say blockchain, because then couple of years later, everybody was antagonizing blockchain and Bitcoin, which may sound funny, but that's what a lot of companies were trying to do. And that became mainstream quite quickly, I would say a couple of years later. And of course, today, I think the market is larger than we ever expected at the time. Yeah.
So what were the key promises of Bitcoin back then?
I would say the key promise was exchanging value with no one telling you can't, basically. The freedom of working in a peer-to-peer way with money. Because obviously we're talking post-2008. So we're talking full de-risking economy, full compliance departments were starting to swell up to what they are now. So we're talking about a time where money exchanges were becoming almost de facto suspicious, right? I'm sending money to my son, for example, or my relatives in France, and I have to explain why. And I was going to France, and I remember putting a few €100 on a bank account was seen as suspicious. It was very difficult to withdraw, very difficult to put a few €100 in cash in a bank account. So I think that was a key first promise was, I can send you $10,000 worth of Bitcoin from my wallet to your wallet, and there is no question asked. I think that was the initial key Bitcoin killer app was exchanging money. Yeah.
So basically this kind of initial promise has come true and has stayed through time.
Yes, with the caveat that we are now fully aware that the fiat on-ramp and off-ramp is where actually the whole KYC and the whole compliance has to be done in any way. Sending you coin is one thing, but you using it and maybe exchanging it for Singapore dollars or for US dollar, more complicated. And as you were saying, I think today Bitcoin, in my opinion, and maybe that's true by some financial terms, but has become more of a storage of value usage in a way, because a lot of Bitcoin is not moving. And it's not because all of them are lost, or I think it's because people are actually storing value with Bitcoin. And in terms of payments, obviously today there are many alternatives, and even the fiat system has caught up, and you have faster instant payment and so forth, very cheap. So I would say it is still a key one, but I think storage of value has become more dominant today.
Maybe you want to touch some word on this thing that we call stablecoins, because basically the initial kind of promise of Bitcoin was, I'll send money from one place to another. It's going to happen very quickly and at kind of fraction of cost of like traditional banking system. But the key issue was Bitcoin can't be a kind of like speculative store of value, which is volatile by definition, and a good means of payment, which is basically why another kind of solution has had to be found. So can you maybe mention or explain a bit on where these stable coins, what's a stable coin and where these stable coins kind of from, and what kind of problem did they solve that Bitcoin didn't?
Yeah, Bitcoin is basically a digital version of a fiat currency, or we can call it a digital proxy of, for example, the US dollar, meaning that you can exchange, again, P2P from wallet to wallet, but you're exchanging something which is supposed to be pegged to the dollar, meaning that whatever the dollar value is not supposed to change at all. We saw instances where it may, but let's say in general, in theory, it cannot change. I remember very well the origins of stablecoins. Brock Pierce is one famous entrepreneur in the space, and he is the first one who talked about the USDT Tether. He co-created it with Craig Sellers, who was, I think, at the time with Mastercoin, which was like one of the first altcoins. That was in 2013 that Mastercoin was born. And yeah, I met them early on and I saw the reaction. So the first reactions was very negative. The market was, we don't want the dollar. We're here because we want Bitcoin. We want a parallel system. We don't want to go back. We don't want to go back to the dollar. But it was not so clear at first what was going to be the usage and the utility of Tether. But what became very clear is when people start trading and when people started want to move funds between exchanges. Because at the beginning, moving funds between exchanges was painful, because if exchanges were asking, for example, for 5 Bitcoin confirmations, right? And the Bitcoin network confirmation, each of them takes about 10 minutes. So five times is almost an hour. If you try to do fast trading and you have to wait 1 hour, then as all the arbitrage, people were trying to get arbitrage opportunities. So all this trading was impossible with Bitcoin because it was too slow. So people realized, if I send USD from one exchange to the other, or from one wallet to an exchange, etc., that's, first of all, is quicker. And secondly, there is no volatility in the price. So I think that was the key. And of course, now you can talk about remittances and a broader usage. But I think really the first one that opened people's eyes was the trading arbitrage opportunities that it would enable.
Great. So let's talk about this thing that you and a bunch of other people call open finance. So what is open finance and why does it matter so much?
There are a few definitions about open finance. First of all, open finance is not only a cryptocurrency solution or cryptocurrency domain. For example, in certain countries, you have seen banks are being asked to open up their system, APIs and so forth. So there are solutions out there for people to integrate more easily with the legacy banking system. Obviously, in crypto, open finance is more associated to decentralized finance, to DeFi. I wrote a piece in July 2020. It was called the Coded Income Model. It was just at the beginning of DeFi. I think at the time, DeFi had a overall TVL, which is total value locked, of about 1 or 2 billion. And it went up to 80 billion about a year later or so. So I was writing about the fact that DeFi, the main problem I saw with DeFi is that it's a very circular and closed loop kind of system where crypto traders trade with other crypto traders and they play different strategies and they make some yield, they make some money, etc. There was no direct impact on what we can call the real economy. People every day having to pay loans, people having to pay to fund their own SME, their companies, their small business, whatever. I saw that as an issue, and I was thinking about just offering solutions about why don't we look at ways so that regular people are not necessarily crypto traders take advantage of this liquidity and this flexibility of DeFi. And some companies have done so. We invested in one called Silta, where they use DeFi platforms as the origin of the funding, and then they finance ESG conscious, or for example, photovoltaic farms, solar panels, and so forth. So we see the beginning of a intertwining between real economy and the crypto economy. But DeFi, that was the main problem I had. We saw that the problem has evolved into a much bigger problem is when we had the Luna crash, for example. All these DeFi platforms that were relying on UST, that were relying on certain of these cryptos, they went down and they took down people who were actually putting savings, their regular savings in there. So it was actually the other kind of the dangerous aspect of DeFi that actually has been the most notable to date. So we haven't seen yet a clear positive impact on people's lives, I would say. Of course, some people have made money, but again, to make money in DeFi, you need to be literate in finance, because it's not so simple, most of the trading strategies, and crypto. And you need to be literate in preserving your assets, all these hacks that happen regularly. So I would say the bar is quite high until now. Yeah.
So basically talking about this kind of open finance thing that for the moment is very crypto versus crypto player too
In
much,
DeFi
basically.
space,
That's the
yeah.
big problem, the decentralized finance space. But it could be very useful for the real world.
Yeah, I believe.
So what needs to basically what needs to happen for this kind of bridge to really exist, and how far are we from that?
Yeah, very good. A few things have to happen, and it's interesting because Bitcoin in general gave people an incentive to know more about monetary systems and where money comes from. And I think a lot of people who have gone into Bitcoin have discovered where actually money comes from, basically created by banks when you ask for a loan, and what's behind and how the Federal Reserve works and other central banks. So that was the first step. So for DeFi, you need basic economic literacy again. And then you need to learn about, I would say, because the UI user friendliness of this platform is very low. It's not that easy. If you look at Curve or there are some DeFi platforms where it's clear that it's for people who understand DeFi. It's not meant for people who just come and want to learn on the go. And so first is improving UI. Secondly is putting a lot of tools out there for people to learn about DeFi in general and crypto and different strategies. So I think we need an overall large number of people to learn about this. But this has happened in other sectors. For example, stock trading. In the 90s, I was saying, in the late 90s, when the internet stock was the fury, right? Everybody wanted to go in. We had all of a sudden a lot of people became day traders, right? These people just learned about it. And for example, even just owning a computer at the time made a difference, obviously, owning a computer, having internet, etc. So we need to close more the digital divide today. Obviously, that's the first step. And then people have to be incentivized to learn about it. So there is still an education process to happen. It could take a few years for a critical size, a certain critical mass of people to actually use DeFi to make it much more mainstream than it is today. I think it could happen. I would say, let's say in 5 years' time, because in crypto things go quite fast. I think in 5 years' time we could have quite a large liquid market, hopefully safer as well in the process.
If you think about it, was one of the key narratives of this last cycle was actually this kind of centralized companies, so these lenders that were saying, we are the new banks, we give you we're safe and we give you a 5 to 10% yield while your bank gives you 0%. And they were doing the bridge between the normal people and this kind of complex decentralized finance world. But it didn't work. Yeah. Basically, everybody blew up. And now we even have Genesis, which is one of the biggest in the space. Like even them that are in business since almost 10 years blowing up. So do you really think that it's from decentralized finance that we're going to get the next, whatever we'll say, 100 million people or 1 billion people through crypto? Or do you think there is something else that's much more likely to bring normal people? Because there is the fact having to educate people on new things is one thing, but there is also a level of like understanding and technical kind of knowledge that a lot of people will probably never have. For example, Bitcoin is the same. Like people need to be interested by money and try to understand what it is and all that stuff. And if you love to invest and if you think about wealth building and all that stuff or preserving your wealth, like it's very interesting. But I still believe that most people don't even save money, basically, or don't save too much money and don't necessarily think about investing until pretty like later in their life. Okay, maybe the millennials now or Gen Z kind of thinking more and more about that. So do you really think that this kind of decentralized finance word is the one that, or kind of field or sector is the one that's going to bring crypto to the masses, or is there something else?
It looks. The other contender, of course, has been NFTs, which has been a big narrative as well. To come back on the centralized that you mentioned, the ones that mostly have gone down, unfortunately, over the last year or so. First of all, they were not DeFi. Okay, to be clear, they were pretending to be DeFi. They were a black box. They were a black box where you send money a bit like a bank. You lose access to your money. You give it away, as we saw now recently from the different court decisions.
Yeah.
You give other people's control of your own funds, of your assets. They pretend they're going to do something sophisticated, but actually they don't. They do something risky to try to get themselves more yield than they're going to give you. And there was this arms race. I remember very clearly. If you take a snapshot of a year ago on CoinMarketCap, they had a DeFi tab, right? And you had the different yield that you could get on Bitcoin, for example. Top one was maybe Nexo, second one was Celsius, and then you had Voyager, BlockFi. Most of these companies have had gone down. Nexo still around, but if you take a snapshot, you see that this kind of arms race to the highest yield was very risky, because where does yield come from? In DeFi, on certain specific platforms, you can understand, and usually it's an inflationary yield by issuing more tokens. Or today there is a revenue share on trading, which is healthier. So we needed that phase. It's always the same as internet, same as early days of crypto. You need that phase of people trying and people failing. Of course, when people try and actually do it fraudulently, that's a different matter, which the courts have to solve. DeFi is not about giving your asset to someone else, because if you use DeFi, your assets are basically on your wallet. Yeah, of course, you could get a proxy to the token, because that's the way it works on many platforms. But basically, you still see on the wallet something, right? So that's a big difference. I think that narrative that you were talking about, this centralized platform, was basically just marketing and them trying to get as much crypto they could from the market. That's all. In terms of, I still think that what you mentioned, of course, is true today. There's still a lot of people have to learn. But yes, I think people will have less and less choice, really, because in order to try to fight inflation and so forth, inflation was not an issue a year ago. It's a big issue now. People have to find ways to manage smartly and actively their money. I think DeFi is still going to be quite popular and quite successful in its, what I call smart contracts. I call it function-centric systems, meaning a smart contract is doing what it's supposed to do. It's not, there is no human element. And that's a great thing about it, right? It's like when you go on a smart contract and it goes through a process and the output is known, it's deterministic, then there is no risk. Then there is, of course, the risk is that a smart guy finds a vulnerability, etc. But let's say if you look at a smart contract that is working, you get what you're supposed to get, and no one can come and try to take it away from you or etc. So I would say that's what is also attracting me to DeFi, is the fact that it works on smart contracts, which are really, you cannot really disrupt it. You cannot corrupt it. It's an anti-corruption system. That's great. And I think more and more projects and more overall systems in the world will start using smart contracts because of that, because it's anti-corruptible in that sense.
So you're talking about these smart contracts and these decentralized finance stuff. And we also mentioned a bit about these NFTs, things that we're going to talk about later. And they've happened on a platform called Ethereum, basically, which some people called a trustless application-based layer. So what do you think about Ethereum as a trustless application-based layer, as a, I'd say, open-minded but true Bitcoiner that you are?
To be honest, I liked Ethereum. I remember very well as well reading the first time the Ethereum white paper early on. I like the idea. I'm an early Bitcoiner, but I've never had any issue with other crypto networks. But I would say nothing is trustless, to be clear. I think trustless is usually the wrong terminology. Trust minimizing, as we say, it's like you reduce the trust that you need. But obviously, we all know that Ethereum relies on different systems, different operators, even validators, whatever, nodes. And you always rely on someone eventually, or on a system somewhere. And if that system fails, for example, during let's say about a year ago, when everybody was trading more than today, there was a huge volume, especially on DeFi platforms. I remember when there were like pressure times where gas price was getting crazy, like hundreds of dollars to do one transaction on Ethereum. I think that was a big failing of that particular network at the time, which Ethereum or different actors on Ethereum have tried to solve, and the gas price is lower today, but to some respect, it can be quite high. So I would say Ethereum until now has succeeded in being the major network on which a lot of these applications are running. And one of the reasons is because they started early and they got a lot of good developers early on. So the other blockchains that came and early Ethereum killers like Solana, I don't know, there are many out there, but they need that time. They need that time to get the developers on board. They need that time for the platforms to mature, etc. So there is obviously a lot of catching up to do. So I would say at the moment, Ethereum is still now, especially with all the L2s, right? Polygon, Arbitrum, etc. Is still the network of choice for a lot of these applications and a lot of these developers. But I'm very open, and I hope, and I'm all for competition. So I hope that the other blockchains that are coming are also going to provide great experiences and great applications for everyone, because it's in the interest of the users. At the end of the day, we have been saying that for a long time, but at the end of the day, users don't care about the blockchain.
Absolutely. Absolutely. Just care that it's fast and that it's cheap, basic. Do you think users care about this decentralization thing or not? Most of them.
Some users may not really understand why it is an advantage. But of course, until things like Celsius happen, and then you realize that's not decentralized at all. My assets were completely taken away from me. So I would say at first, no. Again, there's always a problem in the new industries is that we call it, for example, decentralized finance. But for users, maybe the only thing they look at is the yield, or they don't care. I don't think they care too much. I think, again, it's a question of making sure that you get what you're supposed to get. And that was, if you look at it over the past couple of years, that was a problem, because when the yields got crazy and people thought, oh, I can get 10, 20, 30% easily by doing nothing, by just putting these assets here and waiting for it to get more of it every month or every day, people start relying on it, like funds, and start making strategies. And when that went down, that put into a whole different light the whole sector. But again, this happens in most new technologies. You have to go through these times where things are tested, and there was a lot of wealth creation and a lot of wealth destruction, which is very similar again to the internet years. People learn from that. Yeah.
You talked about competition, and that competition is really good because it's better for the end users. Would you say that Bitcoin and Ethereum are competing, or would you say that they can both live in the same world?
I would say I don't see them competing that much. I would say today, a lot of the early crypto people have both. I would say they have Bitcoin. I mean, there are different use cases. There are a few open finance or DeFi applications or Bitcoin, but it's not so easy because, as we know, if we learn a bit about Bitcoin was not really created with the intention to be a very programmable type of, let's say, network, or on a network on which you didn't need to have so many programs. And actually, Ethereum was created with that objective, right? For as many programs as you can, or a language that was created for that solidity, etc. So I would say the early onset, the utility of both networks are very different. But yeah, they are compatible. I don't see them competing so much. People are always talking about things like the flippening and all that. I'm not sure it matters that much because, again, newcomers are going to focus too much on the price, right? Because a lot of newcomers, the only thing they realize, for example, I've been teaching universities about blockchain, and I remember that sometimes just to get attention of the students, I start talking about the price. And that's when the students pay attention. When I say, look, this is the Ethereum ICO, 25 cents an Ether, and this is the price today. And people, okay, wow, great. So they focus on the price, right? When you have more experience, you focus on other things. You focus on security, decentralization, you focus on what you can do with a network. So I think in that sense, no, I think they can both coexist for as long as possible. Yeah.
Yeah, absolutely. It's just speculation, and kind of greed is actually a positive thing because it's what drives more and more people to the ecosystem. Even though there is a lot of wealth creation and the destruction, there is more and more people sticking around, and more investment made, and more basically money for entrepreneurs to build more innovation. And that's how you build a new sector, a new space.
Yeah.
Great. So one of the key innovation thanks to Ethereum infrastructure is the invention of NFTs, also called non-fungible tokens, which I believe you also are you also keeping an eye on? So what's your definition of an NFT?
An NFT is a unique asset. I think the main differentiator with other types of crypto and token, it's basically unique or meant to be unique. And it's a token with which you mostly have a kind of an emotional attachment. The first wave of NFTs have been in the art, in the collectible, in the celebrities, in the sports club and so forth. So that took everyone by surprise, is the amount of people that it drove to blockchain that were completely oblivious to blockchain, people who didn't care at all. And then all of a sudden they are on blockchain because of NFT, because there is an artist or a celebrity they follow, or a sports or an athlete, and they see this, or a brand, and they see that this brand is issuing NFTs and they want to be part of that. And I think the surprising fact is the speed at which a lot of people have onboarded onto the blockchain because of NFTs. So yeah, we looked at it at Coinsilium. We looked at NFT very early. We saw it as a drive for adoption. We had our own collection. We invested in some companies that are building NFTs. We also have done a couple of hackathons, and one of them was called NFT Vision Hack. So I think it's a great sector, and still with a lot of opportunities and a lot of potential in the future. But of course, what I think is going to evolve beyond this collectible and etc. I think the next phase is what everybody is calling tokenization. So basically tokenization of a variety of assets. And I think NFT is great because we're talking about unique assets, and most financial assets are unique assets. So I think NFTs could do well and very big things in the financial world in general as well. Yeah.
So what would you say is the key innovation behind NFTs and why it's going to be basically, or it has the potential to be so big?
The key innovation is that all of a sudden you give value to something that is, in theory, maybe not so liquid, in theory, maybe not so common, etc. So things that were not really part of the crypto narrative, because the crypto narrative of since the ICO boom, let's say, so 2017 to, let's say, to 2019, 20 was really fungible tokens, ICOs, as you may remember, a lot of ICOs. And that was purely for funding new projects, basically. But NFTs deal with things that may already exist. Of course, you can do new art and you can create an NFT, or you can do a new book or a new movie or whatever. But you can also tokenize things that have existed for a long time. And some artists have done just that. They have had pieces of works of art they had for 20 years, and they create an NFT from it. So that's great. You're transforming. It's a real digitalization that we thought was coming early on with first the internet and then crypto. I think we're going towards a real digitalization of basically everything. We were talking about this very early on, but I think that's coming.
So basically, through the internet, we had a digitalization of a lot of things, but the kind of, how can I say that? The kind of truth was, because it's digital, it can be replicated. Therefore, it doesn't have value, because something that can be replicated infinitely doesn't have value.
Yeah.
And one of the key things with these NFTs, I mean, at least one part of it is that you can assign scarcity to this kind of digital. It's the beginning of that is basically Bitcoin. If we think about it, is how do you create digital scarcity? And now NFTs, how do you apply that to a lot of other things? And at the same time, it's also how do you create liquidity around things that didn't have any before, such as, I don't know, for example, you're a restaurant and you have a loyalty program, and then you could turn this into an NFT, and then this thing becomes valuable because depending how much the restaurant or company providing this NFT is providing value around that, it's gonna, and depending how much you are building towards your own membership and basically using the restaurant or whatever, it gives you, then you're gonna create more and more value into this thing. And the day you move to another country or something, you're gonna be able to resell it. So basically it's about also potentially creating liquidity around things that were not liquid. And some people even say it's new GDP out there that kind of existed before but could never really be translated into value.
Yeah.
And now around brands basically and all that stuff.
You can also look at fractionalization. For example, if you have a very expensive painting, or if you own an old car, vintage car, and maybe it's very expensive to find, too expensive maybe for one owner to buy it, then you fractionalize it into 100 NFTs, right? And then all of a sudden you have 100 owners. You have done a instant fractionalization. Of course, there are legal matters to look at, but technically you can do it. And of course, it's easier to find liquidity around trading 100th of an expensive thing than the whole amount. Yes. And there is a whole, I usually refer to what I call the tokenization layer. And we are used to the securitization layer. So basically we have been transforming a lot of things and mainly companies and assets into shares, right? That's very common. As we've been doing for a century or more, right? But now we are moving into tokenizing things. So again, it's another layer, and it can be on top of securitization because of course you can tokenize shares, but it can be on top of anything. You can tokenize a building if you want to, and a building can be tokenized without going through shares. You can be tokenized directly. Each brick is one NFT. Each room is one NFT. It doesn't matter, right? And for this kind of use cases, you need NFTs because if you tokenize into ERC20 or fungible tokens, every token will be the same. But in the case of a building, each room is different. Each floor is different. So this is a great thing about NFTs, that it brings this variety of use cases. And that's why I think the potential is enormous, because in reality, most things are different.
So you're saying the potential is enormous. How big is the potential for this NFT thing?
The whole economy, like you were saying, GDP, banks, central banks, governments may decide to tokenize, I don't know, tokenize institutions, tokenize assets, tokenize, I don't know, gold, commodities, energy. We're going to the stage where the tokenization layer becomes ubiquitous in the sense that we are used now to this kind of digital layer because we're using everyday internet, mobile, etc. But the financial application of it is still very small because, for example, you're trading stock, but again, you're trading stock through legacy systems. You're not trading stock directly NFT to NFT, etc. You're trading real estate, but again, you actually have to go and do the notary work. And so we're still in the intermediation. So the technology, the internet, to some extent, blockchain has brought quicker, faster, cheaper intermediation, but it's still not the real thing. It's still intermediation. Yeah. If you tokenize, then you get to the stage where, that's why Bitcoin in certain ways has not yet produced what everybody thought about peer-to-peer payments, because real peer-to-peer payments means the country where you live in has to accept Bitcoin as a currency. And this is today, we have El Salvador, and to some extent, some other countries are accepting Bitcoin, but still we go through the legacy pipes. So if we move to real tokenization, then that's going to become a layer people live in. And to some extent, metaverse is supposed to bring us to a stage where we live in a kind of digital world. But I think tokenization is going to have more impact than the metaverse for that use case.
So what needs to happen for NFT to really create a revolution? You're saying basically kind of countries embracing it, what kind of accepting this in the law? Or where do we need to get to for this to kind of release the potential of this, potential of this NFT
Yes,
thing?
but if you think about it, accepting into law is not that difficult because we are used, again, we have been doing it for centuries to deal with what we call virtual assets. Virtual assets, in a way, shares of a company is a virtual asset because obviously a share of company doesn't really exist. It's something you agree, we agree, a third party like a notary or a state agrees exists. But a share in Apple in a company is just something that there is a whole construct around that tells us this exists, but it's not a physical thing. We are used to live in a world of virtual assets. And actually, even if you read about anthropology, it's something that comes from even 2,000-3,000 years ago, where you had temples that were storing gold and people were using a coin representing that gold, which nobody sees because it's behind vaults, etc. So we're used about that. So I think in terms of law, it shouldn't be a huge leap to go from where we are to NFTs being accepted as another form of virtual assets, right? You need, of course, the infrastructure. So you need institutions starting to deal with NFTs more in a technical matter, meaning that maybe a public institution needs to understand of assets, of digital assets, wallets and so forth. But I think we're going there, and it's a trend that will happen anyway, because of course, if you look at CBDCs, which although I'm not a fan of, the good thing about CBDCs, it will create a public force, public human resources that are actually familiar with digital assets
and push people towards that. Yeah.
Yes, and using wallets and so forth. Yeah.
So, what are the key industries and kind of businesses or business sectors that you see the most impacted by these NFTs in the future?
Again, I think all of them will, but in terms of which one are going to go faster towards it, those that are used to deal with securitization, like stocks trading, real estate, because in real estate for a long time we had REITs, trusts around real estate. We're used to paper representing anything as real estate, for example. So I think stock trading, real estate, and we were discussing, you were saying loyalty program. Yeah, it's a good example, but I was think brands in general have already embraced in a way NFTs, many of them. So that will go further. But again, how are they using it will differ, because right now brands are just issuing collectibles. So they're playing with the first level of NFTs, I would say. But real tokenization will come a bit later when they understand the potential and the fact that it can become live type of application of this technology.
Yeah. What's something that you think is really important about NFTs that we haven't talked about today?
I think what is really important to solve with NFTs is the fact that this is only technically the token you have in your wallet gives you access to something, right? And usually that something is on IPFS and sometimes on Amazon or whatever. So I think that's where the important aspect technically has to be solved, is that to make sure that people who own NFTs cannot be, that mechanism, that system cannot be too fragile so that easily people can change things. For example, if I own an NFT, again, in the future, not everything is going to be linked to an image, of course, but it may be linked to a certificate of some kind, right? So you don't want the issuer to easily change that, or someone else, a third party, come and change that. As we know, this has happened before. So that system overall has to be secured to make sure that, again, NFTs in the future are safe for everyone to use.
Great. Okay. Let's talk about the crypto minefield. So you've been through many crypto cycles, and to say the least, this industry is the definition of a minefield. We could think that with the maturity, it becomes less risky, but what happened last year actually shows that it's not really the case yet. So how did you manage to not only survive, but strive in the last 10 years?
Yeah, you're right. The cycles are still there. We have had extremely cycles. One of them, for example, was 2018, where there was a great awakening to tokens in general, and a lot of large organizations, and many of those became our clients when we were doing a lot of advisory at the time. That was really a great revenue generating activity for us, and also helped us build our crypto treasury as well. So in the down cycle, the pattern has been the same for, I would say, the three major cycles. The first cycle that I've lived through was 2013, 2014. So 2013, Bitcoin price goes to about $1,000 plus. And then 2014, early 2014, MTGOX goes down. Price goes back down to 250. And then we had very two slow years, I would say. Until summer 2017, it was really very slow. And there's always this correlation between price and sentiment. So when Bitcoin price is low, much less interest, much less liquidity, much less overall in the sector, right? So we have seen this, and this happened again after the ICO hype cycle, 2019, and it's happening now, which we now call crypto winter, right? But as you were saying, more and more people come and more people stay. So the industry has become stronger in that sense, that you have always newcomers, but out of these newcomers, some will go away because they're not interested, but many will stay. But in a way, of course, that makes the numbers. One of the reasons why I would say the fiasco or the debacles that we saw recently in the last few months have been, the numbers are staggering, is because overall the market is much bigger. Overall, the valuations are much bigger. So of course, we're talking now about easily about billions of dollars. And if you look at 2016, we're talking millions of dollars, the different scales in terms of valuation, in terms of daily volumes, etc. And today is billions, because every day billions are traded, and many we have many crypto projects with billion-dollar market cap. So we see the same pattern of kind of de-risking, people going back to more reassuring type of assets, going away from risky yields, going away from risky strategies. When I talk about Coinsilium as a company, we don't take crazy risks. The only risk we take really is into going very early, betting on entrepreneurs. That's a risk we take. And that's the one we believe we have to take, because this is where there is value can be created. But we don't take risk in terms of trading and things like that. So we like to go early, pre-seed on entrepreneurs we feel are very good, brilliant, have talent, and then we wait for that to mature. So in that sense, actually, hype or no hype, that doesn't change. We made 5 investments last year, but these investments are still, I would say, very reasonable even today. But of course, today we have more opportunities because money is more expensive, valuations are lower, etc. So we just continue doing what we've been doing.
So what are the few criteria that you focus on when you decide whether or not to invest in a project in order to minimize the chances of getting burnt?
I would say we look at the market opportunity. Of course, I think that's a basic match that we want to see, that we both believe in entrepreneurs and us. We both believe in the same direction of the market and where that project, that application could be in the future, its positioning in the market. So if the market has a lot of potential, then we want to go there. What is very important usually is to anticipate quite a long runway, because the markets mature at different speed and it can be slower than everybody thinks it will be. So we like to look at markets that we think are going to be strong maybe 3 years from now, 2-3 years from now. It's difficult to predict much further in crypto because things change very fast. But of course, the main criterion is the team. We really need a strong team. The chance now is because we have been in this space for a long time. We are usually connected to the team somehow. For example, some can be spin-offs of previous projects that we know. Some have members of teams that we know we have worked with before, etc. So we usually have some kind of connection with the teams we invest in, and that helps us in the trust factor. Overall, there is obviously still a very risky activity, and therefore the best way to minimize that is to invest in various opportunities, different markets, and hope that we actually identifying the good ones for the future.
What's your biggest fuck up in the crypto market? Because what I is especially in this kind of market that are very crazy, volatile, risky, often the kind of success is also linked to failures and previous failures and learning.
Oh, yeah, of course.
So basically, what's something that you want to talk about that you're saying, look, like I've done really well in the last 10 years, but this is also something that went really wrong? Or
I would say, like most investors, and this is, some of them are pre-Coinsilium, because initially we were investing 2013, for example. There were some opportunities to invest in companies, and either I didn't invest or I wasn't quick enough to invest, because sometimes the round could stop quicker than we expect. So there are some big projects that are today very large that we could have invested very early on, right? At like 1 million rounds and so forth. But say this is common to most investing firms or most investors in general, that you miss out on a few big ones. But I think overall, of course, there is a bit of a survival bias in this industry, because, for example, there are also many projects that went down quite in flames. And there are also many, for example, crypto funds that went in flames. So of course we're trying to maximize the value here, but people have to be conscious that there has been a lot of companies burned to the ground, and I would say even worse, with legal problems and so forth. So in that sense, your term of survival was quite right, but of course we're trying to do much better than surviving. So so the problems or the things that we have missed, again, more like pre-Coinsilium times, a few big projects. For example, I knew the Ledger team very early on. We spoke to them before they were Ledger. And at some point, there was an investment proposal, and that was surprisingly quickly taken by a French VC that I didn't expect. And so we basically didn't invest. And Ledger has become a great company with a great success. But this happens to most investors out there. And we will not have 100% success rate. obviously anyone in choosing the type of investments. But I think overall we have done well. We have got some very, very successful ones as well. And hopefully even recent investments could be, we think, have a lot of potential.
So for you, the biggest mistakes are more missed out opportunities than actually investing in the wrong things.
Investing in the wrong things, we've never done a kind of all in, right? We've always invested, I don't know, a tenth or a fifth of our budget or whatever. So investing in the wrong thing, of course, it happens all the time. But if we lose a reasonably small amount of money, it's part of the life of any investor. No, we don't have any we've never invested, let's say, millions of dollars in a company that went down. No, we invest very early stage. So we try to optimize a ratio of, even if we put only 100,000, 200,000, we still try to get a reasonably good stake, and as well one where there's a very large potential. Yeah.
So what's the most important lesson that you've learned when it comes to investing in general?
I think the most important lesson is to be quite open-minded. And there are some projects that succeed that are, in general, maybe if you look at it in a very vanilla way, you may not feel that they will succeed. So I think, and everybody comes with their own baggage, feelings, and also baggage about what you think has been successful before. And the problem is that entrepreneurs come with the same thing. So sometimes they try to copy concepts that have worked before so that investors think, okay, this is like the consensual. I think that's the problem, is that consensual investments usually don't work. And in a way, we've seen it with FTX has managed to get people on board, like sovereign funds and things like that. Why? Because it looked like a consensual type of investment with all the right boxes were ticked, etc. And then you have an entrepreneur who comes with something extremely out of the box, out of the ordinary. But if he's really true to himself and it's something that he really believes in, then I think that's all other criteria being right. But that could be an interesting opportunity. And these are not easy to find and not easy to identify, because they may go against the consensual approach to what a safe and a potentially successful investment is. So we need to keep an open mind. And that's something that can be done only by different characters and not being only one to look at it. I think that's my big lesson, is like to look beyond the common type of what should be successful in general.
That's really interesting, because some big investors actually say that investing is a very personal thing. So obviously, as you're saying, there is all this kind of bias that you need to be aware of, but it's much more it's much easier said than done, basically.
Yeah.
And so it's on one hand, you have some big investors saying it's a very personal thing. On the other hand, basically understanding this thing and understanding that basically alone, you're much more likely to follow your bias and so therefore be less good.
Yeah.
So what's the kind of number of people you should interact with or team up with to make these investment decisions? And like, how do you, let's take a concrete example, like maybe sometimes you were with other people making a decision and you were not agreeing with them. So maybe you didn't want to do that investment, but you ended up going because maybe you're 3 people and there is 2 people going for it. So how do you deal with that? And what's
in our case, we wouldn't go because we need unanimous decision, but
everyone,
okay. But of course that's up to whatever kind of investment committee governance you want to adopt. 2 out of 3 could work, but we usually have to be all agreed on our board. But obviously there are other solutions out there. I would say if you have a variety of background in the team, is great. People from different backgrounds, people bring different things to the table. That always helps. We may not agree on something that can be good, or we may agree on something that is maybe less performing than we hope to. But I think it's good to have the discipline of not really looking back too much on that. We can look back maybe for our own performance, but not looking back in any kind of personal way. I told you we should have done so, or this is not. Investing has to remain a professional activity in that sense. And in some crypto funds, we could see that's a problem, because a lot of crypto funds have come from people who have done very well, extremely well on 1 or 2 projects, right? And because they have done extremely well, they have accumulated enough wealth, funds, digital assets, whatever, to actually create a structure and call it a crypto fund. The problem is they may not have the background of professionally investing, and they may not have the experience of professionally investing. And therefore the investment becomes, I like this, let's go, a bit quick, a bit no criteria, no gut feelings, etc. And and maybe that's, in my opinion, maybe that's not the best way. Maybe you should still stick to some professional way of investing. There is no secret sauce, obviously, because otherwise everybody would be good at it. One reason why there is no secret sauce is because a lot of it is to do with the environment. And as we saw, for example, when there's a massive shift of environment, especially macro environment, happened a few months ago, like we go from free money, sub 1% borrowing costs and crazy things like that, everyone piling on to tech stocks, etc. Then we go complete opposite all of a sudden. High inflation, high borrowing costs, tech stocks going down, bonds going back, crazy macro massive changes. Adapting to that is not easy. Seeing that you need to change the way you invest is not easy. Seeing that you need to make 180-degree turns, and obviously not necessarily for us, because we are focused on blockchain. And again, our investment rationale is quite simple. You go pre-seed, etc. But I would say if you're actively managing funds, this was a killer year for most funds, even crypto funds. I saw the performance. There was a report. It was negative double digits for all crypto assets. So almost very difficult to get anything positive or not as negative as you can.
Absolutely. So you said that this investing thing needs to stay professional, but it's probably a passion at the same time. So what are the key passions that you have beside investing? And how do you balance these passions with your career?
Always been quite, unfortunately, maybe for some, but my professional life has taken a lot on my life for a long time. It's not nothing actually related to crypto, even before. I was doing investment before, for example, the period I was saying, 2004 to 2008, for example, in Asia. And basically when you do investment in private equity, you meet people any time of the day. You don't worry about weekends, evening, etc. So I kept that kind of professional mixed kind of life. So I don't think I have any major passion that has any influence on the way I invest or anything like that. I don't know. I like sports. I like sport. I like reading, but it goes easily into that kind of my schedule. And it's not, I would say we all grow and mature in different ways, right? So I would say for me, physical activity and certain sports and reading as well, certain interests help to grow and mature along. And I guess that gives a bit of depth when looking at investing, because again, investing is about what we think about the future. And you cannot think about the future without a very good understanding of what's happened in the past. So I would say that's how reading helps a lot on that. But again, keeping an open mind, because even if you know a lot about the past, future can surprise as well. Yeah. So I don't know, nothing really special, but just trying to have a balanced life. But unfortunately, for a long time, it has been very professionally oriented.
So how do you manage your personal relationships and even growing a family when you're so business wired or investing wired and kind of everything is about that?
Yeah. Luckily, I can discuss this kind of things with my family. My kids have known about Bitcoin very early. Yeah, sometimes they ask me about prices and things like that.
So the kids fund is in Bitcoin since a long time.
Funds have been in crypto for a long time. Yes, but I think it's good for them to know about it, and to, at least at the moment, they are not actually doing anything with crypto, but at least it's in their mind. Yeah. No, I'm lucky in the sense that it's not a problem. We openly discuss these kind of things. And of course, not details about any investment, but crypto in general. And it's good to be able to speak about it. Yeah. And of course, a lot of my friends as well, because you start living in crypto and then suddenly a lot of your friends come from this sector. So but I must say that in Singapore, I find a lot of people that I don't know are actually talking about crypto. I overhear them in transport, in the gym, etc. Wow, that's a big difference between now and, of course, 8-9 years ago, when crypto was not such a mainstream thing. And now everybody has an opinion on crypto, which is fun and it's interesting. Yeah. It's great.
What's your definition of success in life?
I would say success in life for me, it's at some point just feeling happy about nothing precise in general, maybe overall. Yeah, it's just feeling good that things are going well. It's not a number. I don't think numbers are that important. It's not a kind of status or anything, but feeling things are going well. I've read somewhere that people say to be happy, you need to not have too much debt, like living a life where you don't push yourself too much so that you're not always feeling like there is something missing, basically trying to achieve something. I don't feel like I've reached a certain level of achievement. That's not the case. When I say happy, I'm just happy in general and personally. Yeah, I think that's a successful life when you feel good. And like everyone, I had times where I was not feeling good. So you appreciate when things are going well. And of course, I would say people in this space, people who live in countries like Singapore, obviously I'm privileged. I'm very happy to be where I am and at this stage in life.
Last questions. What's something that you believe in that most people would not agree with?
Yeah, interesting. So initially that was Bitcoin. That was easy. 10 years ago, that was easy. That was an easy one. It's interesting because even 2016, after the empty GOX, and then 2016, I remember was such a low for Bitcoin that people really didn't want it. And I was telling a lot of friends, this is a good time to buy. This is maybe $500, $600. And nobody wanted it. So at that time, it was very clear it was Bitcoin. Today, nothing special. I'm not specially attracted by UFOs and things like that. So I don't know if I believe something that really... Yeah, I don't see anything that is that as controversial as Bitcoin was at the time.
So you're saying 2016, good time for Bitcoin to buy. 2023, January, is it a good time for people to buy Bitcoin?
Yeah, for sure. And some people have been buying now for a few months. Yeah, of course. I think again, there are fundamental reasons, and there are FTX in many ways was using crypto as a way to initially build wealth, and unfortunately there, for some reasons, destroy a lot of wealth. But this was not a crypto thing in many ways. Was not so I would say fundamentally there's still a lot of upside for crypto because there are still many goals to be reached in terms of adoption, in terms of technology, etc. So I think it's still a good time to buy Bitcoin. And we should see more and more people understand that Bitcoin is quite different from other crypto because it still has a very special utility, storage of value, and also it still has the fact that it's not run by a company, it's not run by... Yeah, so I guess the fact that it's still a parallel mechanism, parallel system, decentralized, etc., really makes a difference compared to a lot of pseudo crypto businesses that were here just to make money and unfortunately too fast and many of them get burned. But yeah, I think especially Bitcoin is still a good time to buy for that reason.
If there was a summary or key takeaway that people should remember from today, what would it be?
That I think the lesson that I got from this is that things take time. And you have to go through the rough patches. It seems obvious because now everyone, when Bitcoin goes down, you have 100 Twitter posts saying hodling or holding, but hodling is going down. It's not a straight line. It's not everybody's, oh, I buy Bitcoin in 2014, 15, and then I just wait for it to go up, because there are a lot of downward moments, a lot of moments where you doubt because people come back to you saying, oh, I told you this was a scam. When Bitcoin goes from 64,000 to 16. I told you I was right. Bitcoin was not a good idea, right? Yeah. So you have to live through this. Takes time, live through it. And it's actually, yeah, it's if it's the right thing, like I think Bitcoin was the right thing, and hopefully it's proving it every day. Yeah, then you have to continue working on it and focus on that. And there is so much things and great innovations that happen overall in the crypto space. So keep an open mind for that. Keep an open mind and help those that are building very beneficial things in this space.
Awesome. Thank you so much for your time, Eddy. Where can the audience find you and connect with you?
So I'm on Twitter. I'm Web3 Eddy, which is spelled WEB3Y. And I'm on LinkedIn, just my name, Eddy Travia. Yeah. And then Coinsilium is Coinsilium.com, Coinsilium. For the quick story, we had the coin ticker.
Yeah.
We still have it in London, but we never had it in the US.
Awesome. So thank you so much. Thank you everyone for listening and watching. Please smash the like button and give us a feedback in the comments. Highlights will be posted on YouTube, on Twitter, Substack, LinkedIn, and Instagram. So follow us there to get exclusive access to special content and promo codes. I'll see you all in the next episode.